Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Checking in on Apple daily, weekly, shorter term time frames, we had an artificial spike here in the afternoon. So the high of the day was really up at 113.55, which would put that high right about here. So nowhere near as long an upper wick, and we did not break the high of last week. So it's an inside candlestick to watch going into tomorrow. The 50-day moving average, which was resistance on Thursday, is now support. That level is 112.37. At this point, normal, healthy, bullish consolidation. Look at the 3 days we ended the week on, rejecting at the upper Bollinger Band. So consolidating sideways at this point. We could even pull back to the middle Bollinger Band down in the mid to upper 110s and still be looking fine as long as it's a higher low compared to 108.25. Could throw a trend line up here to keep an eye on some support, and we would hit the real body of the candlesticks. So that's an uptrend support line to be watching, and that's pretty much lining up with that middle Bollinger Band on the daily time frame. So when that's the case, I would just use that middle Bollinger Band rather than the trend line. So it's a consolidation day of indecision. If we get a break of 113.55 tomorrow, it will be bullish. And if we get a break of the low, which was down at 112.49, that would be bearish. But just again, bearish on the short term because there is no red flags here for the bulls, especially after this week, or last week, I should say, on the weekly chart. Looking great, holding this middle Bollinger Band, 110.72. And we had a bullish TCG cross, the 4 and 8 period exponential. Looking for a bullish MACD cross. This is a good looking weekly chart. The bulls have nothing to worry about as long as that weekly middle Bollinger Band is support. So let's look at some shorter term time frames today. And another point that favors the bulls in this consolidation is the sideways trading we saw. That's normal, healthy consolidation to me. So a pullback, pretty severe first thing, but a bounce. We held that low of the day with a higher low, tightened up the range, not much trading opportunity, a little bit of a bull break at the end of the day. But either way, no big red flags for dumping high volume. We've got the hourly. We did lose the 20 period, but so did the overall market, the S&P 500. We can see this wall of support down here, right around 111 psychological with the 100 and 200 period hourly moving average support. So again, all kinds of support levels to be looking at. There are no red flags here that are saying that the bears are about to take over. Need to watch the correlation with the overall market because the S&P 500 just formed a bearish reversal doji. If we start to see some consolidation in the market, we might see Apple stall out as well, which is pretty much what we're seeing. The Apple candlestick today fairly in line with the S&P 500 candlestick. So we'll see what we get tomorrow. Watch the break or watch the potential break of that inside candlestick on the daily time frame. And again, we did not get a spike today all the way up to 115. A little bit of a fluke trade there. And hopefully that will get removed from the chart so we can get accurate data. Have a great night.